Securitize is the first company of its kind to go public via a SPAC deal with Cantor Fitzgerald Equity Partners II in a deal worth $1.25 billion. So let's talk more about tokenization and what value it provides to companies and their investors. Carlos Domingo, Securitize founder and CEO, is joining me here in the studio. Carlos, thanks for being here.
Thanks for having me.
So we've talked for a while. So congrats, first of all, on this deal to go public. And Securitize and tokenization has really become a buzzword since we started talking, I think, a couple of years ago. It's really gained a lot of speed. Yeah, exactly. So I want to talk a little bit about the sort of concept of tokenization first and the value that it brings. We are seeing more of an interest in tokenizing a broader swath of assets, right? And I think most interestingly, or most recently, stocks being tokenized is something that has come into the conversation. Why would I want to, and how does it work? Why would I want to tokenize a stock?
So look, just to explain what tokenization is in layman terms.
Yes.
Every transaction in capital markets, whether it's a stock, a bond, a fund, a redemption, an interest paid, whatever, dividend, involves updating a ledger. Right? So somebody has to have a record of who owns what and how that transaction affects the ownership change and also the money that you've used to pay for the transaction. So tokenization is nothing else but taking these securities and that are in antiquated ledger technologies, silo, not connected to each other, and put them on a modern public distributed ledger technology like a blockchain is to provide all these efficiencies. So why people want this? Well, it's going to democratize access to a lot of assets. It's going to make the assets easier to move around. It's going to make them easier to borrow against them. It's going to make it easier to receive dividends on time, etc. So ultimately, this becomes like a better way of holding and trading the assets.
I guess what I'm confused about is why create a token twin of the asset rather than just securitizing the asset itself?
That's a very good question. So what we do is we actually work with the issuers. So when we issue a token, the token actually represents the security. There is no other copy of that security anywhere else. It's not a twin. It's the actual native representation. It's represented on a different ledger, a blockchain, with the entry on that ledger is called a token. So this is not a twin. This is a native representation.
Well, but for example, if it's a stock, it's not the stock. You're not owning the stock itself. Are you? Okay.
Yeah, of course. So actually, most people don't realize that when you, let's say, buy stocks on Robinhood, they're not under your name on the cap table. They're actually under the Central Securities Depository, the clearinghouse. DTC has a company called CD&Co that all the stocks are actually under their name. But you can actually request those stocks to be placed under your name through an entity called a transfer agent, which every publicly traded company has. And then when you do that, if the transfer agent uses a blockchain as their ledger, then that's tokenization, and you're going to get a token. So it's actually a better mechanism. You're actually really owning the stock. You really have rights. You can vote directly. You can receive the dividends immediately because they will know that you are a beneficial owner, etc., as opposed to holding the stocks in the traditional way.
Okay, so we've gotten a little weedy here, a little bit in the weeds. But ultimately, do you expect that the whole U.S. stock market will be tokenized? And will that, in effect, replace the ledger system at some point?
So look, new technologies don't necessarily completely displace all technologies, right? Like today everybody uses cloud and PCs and phones, etc. But some banks still have the mainframes where they run their old systems, right? And they've never got rid of them. So I do believe that the existing financial services industry, as we know it, it will not be completely displaced, maybe over time, but a very, very, very long period of time. But a new market that is based on blockchain rails, that is more efficient, is faster, is cheaper, is easier to access, will emerge in parallel, and eventually, over time, will be migrated over there.
What is the feedback loop from tokenization to the underlying asset? In other words, is there a risk that disruptions in that market or moves in that market will create a feedback loop to the original asset?
It does not, right? So the tokenization is simply that the token represents the ownership on the asset. So whether the asset changes or not in price, it will happen irrespective of whether you have a token or you have another mechanism, right? So, of course, today markets, they actually, have certain regulations around guaranteeing certain price for transactions and stuff like that. So when you create markets on chain, you need to figure out how that you're going to provide the same guarantees. But besides that, the token itself is not going to be disrupting anything as far as it continues trading according to existing regulations.
Where have you seen the biggest demand for all of this?
I mean, look, with one idea is that, here in the US, we're very spoiled because we think that, it's very easy to access stocks, and everybody has brokerage accounts, and we have companies like Robinhood and others that have really democratized access to this. But as a European, in Europe, the same thing doesn't happen. People don't have access to brokerage accounts. They don't necessarily, transact on stocks frequently like people do here, etc. But they do it with crypto. So there's an argument. Sorry, I've been talking a lot the last 2 days.
Yeah.
There's an argument that you can, give access to non-US people in a more efficient way through tokenization than today with normal markets.
Interesting. Okay, so there is that potential for it to be more of a use case elsewhere.
Sorry.
When do you expect the SPAC combination to be complete? And I'm curious why you decided to go SPAC versus a traditional IPO process, for example.
Look, that's a good question. So we look at both options. In our case, we thought that an SPAC done the right way is a very good mechanism for a company of our size. And it also kind of like de-risks the process and the outcome. We've already done it. We already announced the valuation. We already raised the pipe. So that's all done. And now we need to do the regulatory filing, as opposed to a traditional IPO that we'll have to do the regulatory work ahead and then go to the market maybe in Q1, Q2 next year. So with this process, we're done. We already have our partner. We already have the money in the bank. We already have the valuation set. And then, as soon as the government opens and we can actually file with the SEC a document called the S4, which is the merge agreement between the two companies, then, they'll take 2 or 3 months to review it, hopefully, and then we'll go, we'll become publicly traded and replace the ticker of the SPAC with our ticker.
Okay, thanks so much for coming in. Appreciate it.
Thanks for having me.
Good to see you.